Hi, everybody. Thank you so much for joining us today. I'm very excited to be hosting this session today. We have 4 top advisors who all happen to be Asante advisors as well as Snap users. And today we are going to be talking about what can you ask your clients who may not think they need a financial plan? So we're going to dive right in today. We've got 4 very unique perspectives here, so we want to make sure that we have time for everybody. I also have Lee Martinson, our customer success manager, here to moderate any questions. If anybody has any technical questions about Snap, Lee will be able to answer those for you today. But what we're going to be focusing on here live in the session really is more about the business side of things and not the software. So if you have any questions that we don't get to during the live session, I will follow up with you via email. So you will get answers to all of those questions. So I'd like to start with thanking everybody for being here live today, and also thank all 4 of our advisors. So with us today, we have Eric Thompson, Alex Carter, Par Homer, and Allison Schmidt. So I'd like to open it up with giving everybody the opportunity just to give a quick intro, 1 to 2 minutes. Let everybody know what clients you serve and how is your practice structured. I'll call out the names just so that we can keep it organized here. So let's start with a quick intro from Eric.
Just looking at my screen right now, looks like there's smoke in the room or something. I'm not sure if that's how it looks to you guys, but anyway, yeah. So I've been in the advisory business for 28 years. I'm one of 4, I'd say 5. One of our partners is slowly retiring after 57 years. He's paid his dues and served clients well. But I'm one of 4 partners today, and we work with an 8-member team that helps us deliver kind of a full service offering. So definitely, focused on the investment side, but the planning side really leads to most of our opportunities. And integrating Snap into our practices has certainly led to great opportunities and clarity in the message that we're able to deliver to our clients. So, it's as we had talked about once before. Most people don't plan to fail; they just fail to plan. And so Snap definitely helps us on that planning side and delivering the message and giving clients the opportunity to see, what the future may look like, and it really ties them into the planning process much more. So, maybe I'll leave it at that and pass it over.
Excellent, thank you. Let's move on to Alex.
Okay, well, I should just hire Eric as my head of prospecting because that's perfectly worded. But essentially, I have 2 offices, one in Toronto and one in Collingwood, 2 hours out of Toronto. We serve about 225 engaged households. I say engaged because they really are. That's kind of how we segment our clients. There's a 7-person team with only 1 client-facing person, being myself. So we really focus on planning as well. So even onboarding clients, we're really focused on goals, then the plan, then the portfolio. Similar to Eric, we offer sort of a full service offering between investments and then the advanced planning side, which around tax, estates, wealth protection, and charitable giving.
Excellent, thank you. And let's go to Allison.
Sure, I didn't want to go last, so glad I got to go third. My name's Allison Schmidt. I'm an advisor here in the Comox Valley on Vancouver Island in BC. I'm a second-generation Asante advisor and work in partnership with my father, who sounds like not dissimilar to Eric, has been in the industry for a long time and is closer to the finish than the start. We as a team service about 400 households here in the Comox Valley, and across Vancouver Island. And just like I think everyone on this panel, planning is at the core of everything that we do. We're a very highly referral-based business. About a 50% tie of all of our clients have a family tie. So we work within the family tree, both upwards, downwards, and side to side. And my role in the business, as I've been here for the last 6 years, has mainly been focused on planning, being able to dig into the planning elements, both from a technology standpoint, but also how we integrate that into our overall service offering. We're very big believers in estate planning, tax planning, and as we work to transition our business, as my dad retires in the next couple of years, the planning work that I've done on my time with the clients has been integral to me continuing those relationships and also being able to continue the planning that's been started. So lots of passion for the topic of planning, both for our clients today, but also how it helps grow our business in the future.
Excellent. And last but certainly not least is Par.
Oh, hi. So thanks for leaving me for last. That's great. I'm really happy to be joined by three colleagues from Asante who I admire a lot. So that's really great. Even you, Alex. And we're a team of 3 advisors. We have a young boomer, myself, a Gen Xer, and we have a millennial on the team, and which is great. Eventually, we'll get a Gen Z or Gen Z as well. And we service about 330 families. We are a financial planning forward practice, so everything that we do is driven through financial planning, and that then leads to obviously revenue generating opportunities like investments, insurance, tax planning, estate planning, et cetera, et cetera. The type of people we tend to work with, we have executives, small and medium-sized business owners, and a number of gay, widowed, and divorced women. So that's who it seems to have worked out to. And there you go.
Okay, excellent. Thank you, everyone. So yeah, all of you have a fairly unique practice, so you all bring a pretty unique perspective to the table, which is really helpful to the wide audience of advisors that we have here today. So the first question I want to ask all of you is, how do you qualify your prospects, and how does this relate to your financial planning process? Because I know this is a big one for many advisors. So I'm going to keep it in the same order. So we'll start with Eric again.
So we've kind of got a few approaches that we look at for qualifying clients. One is asset based and the complexity of the financial planning that's needed, or the value that we feel we can bring to the table with those individuals. The second is referral based, which again, similar to Allison, and I'm sure all of us on the call, a good percentage of the new relationships that we take on are through introductions of existing clients. And then the third would be, young professionals, people that don't necessarily have a strong asset base, but have lots of earning potential and can accumulate in a reasonably quick period of time. So we try to stay within those 3 parameters, and often there will be others that'll sneak into the fold. You do it just because you feel like you need to, or you can help them out. But at the very least, we want to make sure that if we can't help them, then somebody else in our office, or we can direct them towards somebody else so that they can get help to fulfill their planning needs and life objectives and things of that nature.
Okay, excellent. And then a quick follow-up on that one. Has your process for qualifying evolved and changed over the years? I'm sure it has.
Yeah, it definitely has. We are not nearly as I guess as focused as we should be with regards to our qualifying process, but we are certainly putting that as a high priority going forward. We've had too much leakage on that side of things as far as allowing people to come in, and so from a capacity perspective, we have constraints, and we need to eliminate those constraints so that we can deliver the best value added advice to the clients that we do serve and want to serve going forward. So yeah, much more in tune with sticking to our guidelines going forward than we have been in the past.
Okay, excellent. And Alex?
Yeah, so for qualifying prospects, our process is to spend an hour with someone, whether it's in person or on the phone, and understand their level of complexity. So we do have some strict minimums that unless there's someone who's accumulating very rapidly as a young individual, we typically have a threshold around 3 million of investable assets now, based on the capacity, as I mentioned to you, 225 households. I'm the sole advisor as of right now. There's 2 training behind me. But even as they come up, we want to really shrink the amount of clients that we work with and those complex business owner clients. So what we do is we spend a lot of time with someone initially on that first hour. We mind map their situation, and from there we give them several concrete ideas that they can take away, and either we invite them into our family if we think there's some good value add, usually through a planning process, right, and some advanced planning over and above the investments. Otherwise, we will tend to either refer them out to a colleague that we feel will best serve them, or we'll tell them to take these ideas and work with their existing professionals. So that has evolved over the last probably 5 years as we've just grown bigger and bigger, and just have more and more capacity issues before adding another client-facing person. And so, yeah, carry on.
Okay, excellent. Allison.
I agree a little bit with what Eric mentioned, that this is an evolving process, and certainly one that I think many of us on the call are probably navigating through as well. Being in a small town, rightfully or wrongfully, our approach for the last 30 years has been, if you have a good attitude and we like working with you, we're happy to talk to you. And that has resulted in a fantastic group of clients. It's also resulted in the need for additional capacity and to be able to focus where your biggest value add is. So today, as we evolve the process, we do still look for attitude. And I think that fits a lot into the things we'll talk about today about planning, because if you are sitting across from a client who doesn't believe in the philosophy or doesn't want to participate in the data gathering exercise to get the benefit of what you do, then I look at what value am I adding. And the number one goal is to work with people where you can add the most amount of value. And I think as that evolves over time, I've learned compared to some people, relatively short time in the industry, that there are sometimes, until you dig into the planning process, you could identify there's actually more opportunity with clients than may meet the eye at surface level. So I think it's about we have a patient process, not dissimilar to Alex. Start with a discovery meeting, try and understand where value could be added, and then identify what the best path forward is from there. As I mentioned, we do have a lot of family ties, and our goal is to be an extension of all of our clients' families. So if I'm taking on clients that may not meet my ideal client profile, but they're a kid of a client that could be down the road, or it could help that additional client relationship, that's always something to factor into the fold as well. But there's probably benefit in having a stricter process. But I think at the end of the day, we all want to work with clients that we're able to add value with, and they will help be a good referral source in the future.
Okay, thank you. And Par.
Thank you. So as a financial planning shop or a financial planning forward type of practice, and really Asante is a financial planning forward kind of firm, most of the referrals or prospects that are coming in to talk to us are all already thinking, hey, I want to work with Asante, or I want to work with the WWH financial team, or I want to work with Pear because I want a financial plan and I feel like I need planning. So we don't get a lot of prospects to come in and say, hey, I've got $500,000 to invest. What ETF do you recommend? That actually might be nice for a change because it sounds really easy. But we tend to do the financial thing. So when we meet with a prospect, we basically have one overarching criteria and then 2 criteria under it. The first criteria is, are you looking for or willing to take advice? Because if you're not willing to take advice, then I don't think it's going to work. Because how can I advise someone who's not willing to take advice and just wants to tell me, I want to buy the ETF XIU and I want you to charge me this fee? Then I don't think there's a good fit personality wise. So if they're looking for advice, great. And then we have criteria. Each advisor in the team has a different dollar minimum, and they're slowly ratcheting it up. So we may need to add an additional person. In fact, we do in the new year. And the other criteria which would offset that is, are you a Henry? So are you a high earner, not rich yet? And so those guys that, like you guys talked about, if they're young and they're in a great job and they're accumulating, those people are very interesting because you can do the planning now and set them up for a lot of success later, and they can turn out to be some of your greatest success stories. So that's very interesting as well. Most of our prospects come from referrals. They come through being active in community groups, mostly Facebook driven at this point, which is so Facebook community groups, and most of them are coming looking for advice, which is pretty good. And so we usually, like everybody else, we have a conversation with them, find out what their issues are, discuss some of the potential solutions that could be there, and then let them go away and think about if they'd like to work with us. And we also think about whether there's a fit. So that's our process.
Okay, and can you share a little bit more about the Facebook community groups? Like, how do you find those? How did you get started with that? How does that work for you?
It did not come from a marketing standpoint at all. It came from there are a couple of dads groups that I'm involved with where we all support each other, both through trying to find a good plumber, mental health issues where people talk. This time of year, in fact, you're seeing a lot of people talking about how difficult it is. Not everybody's wealthy on that group, so some people are talking about how difficult it is to ensure that their kids get something to open for Christmas. So some of those kind of things, and then that led into a lot of charitable work through working through building a community foundation, and then raising money for the food bank, Meals on Wheels, things like that. But within that group, there will be people who are not always looking for a plumber. Sometimes they're looking for investment or financial planning advice, and so I usually just give advice in there, and in a completely non-marketing kind of way, just pure education. And what happens actually is then people end up seeking you out because you've established yourself as an expert. So kind of what all the social media gurus say to do is just produce a lot of content, provide a lot of education on social media, and establish yourself as an expert. And then people will, whether I am or not, it's a whole other story. But then, and then people will come to you, and that's worked really, really well. And to that end, our group, we do a lot of webinars throughout the year. A lot of education, YouTube channel, podcast, all that kind of stuff to try and get in front of people and share our message and do very little selling, and it's worked out really well.
Excellent. Okay. All right. So next question. So let's say you have a new prospect that meets your minimums, but they're coming to primarily for investment advice, and they're not interested in going through the financial planning process with you. What do you do? Do you reject them? Have you ever done that? Do you try to educate them? What's your process when it's clear they're not interested in financial planning? And we'll start with Eric.
I'd say it's definitely an education process. A lot of people just don't know what they don't know yet. Typically, if they've had some success, created wealth, they've done a lot of the right things and maybe had guidance in order to do that, or maybe it's just been a business where they've just really worked hard and created great success. But I think a lot of the times clients that would be in that realm would they've typically used all their time or focused on their business and building wealth versus all of the ancillary values that can get created for them around that, and not necessarily associated themselves with a lot of professionals. So definitely they'll be with a CPA, will get their accounting done, their financial statements, things of that nature, but won't necessarily get a lot of advice outside of that things. That's typically what we see. There's lots of great accountants, but not necessarily a lot of accountants that do a lot of forward-looking planning. So that's where creating COIs and creating those kind of referral-based situations where we can kind of get together, do case studies, share relationships, refer to one another, and just look to create value. I think most of the people that don't want to do planning just don't know what that planning will result in, or they're potentially fearful of what the outcome of the planning may result with as well. So I think at the end of the day, we want to establish that planning, we would still look to work with a client like that, because typically you know if somebody's going to be set for life or on the right path and things of that nature. The planning just really helps to solidify all of that, and more often than not creates other opportunities and value adds for the client. So we would absolutely push and work towards the planning, and ultimately we typically get there. So.
And do you have any specific process that you follow for education, or is that just sort of based on meeting the client where they're at and figuring out where the gaps are?
I think that's exactly it. Through the discovery meetings, right? Through getting to know people, getting to know what their objectives and their priorities and passions are, things of that nature. You tend to open a lot of doors and opportunities for furthering that planning process and letting them make that decision, right? Versus us forcing it upon them. Let them reach the conclusion that, hey, yeah, maybe I do need this planning. Maybe opportunities will come from that. So yeah, I think conversations, relationships, trust, once those things are formed, the planning will naturally come.
Excellent. Okay. Alex.
Yeah, I agree with a lot of what Eric said. I think initially I always viewed a large investment only client sort of as borrowed money initially. So because I really don't think we can control the outcome of performance. So I've always been a big proponent of adding value through planning. So finding a hot button, a hot topic that they're very interested in, or there looks to be sort of an issue or opportunity that presents itself. So I think the longer that we've all spent doing this is my 17th year doing it. We at Asante, we have an internal group of specialists of CPAs, state lawyers, et cetera, that we've sat in hundreds of meetings through those, and then developing an external scope of services with vetted professionals around, again, corporate law, estate planning, M&A, CPA, cross-border CPA, having those connections to be able to collaborate effectively with these people. It allows you to solve issues, solve problems, identify opportunities, and I think that's really, really important. So to Eric's point, we want to transition these investment-focused clients into these planning-based, where they're not operating in silos with each of their professionals. And I think you usually can get there, but if you can't get there, then consider it sort of borrowed money for the time being.
Okay, and is there any, you mentioned like the hot button, the hot topic, is there any sort of typical ones that you find you can identify through your discovery?
I found, to Pear's point, philanthropy is a big one for the higher, typically I'm finding it for a higher net worth client. Philanthropy is something that all the other professionals haven't touched on typically. So that's a great point to start at. I also find to engage both spouses, I find estate planning, if they have children, if they are kind of family stewards, they really believe in leaving a legacy, and a lot of people really care about asset protection for their kids, and equalization. And so if you can begin to talk about testamentary trusts and the use of income splitting and asset protection, and then have a go-to expert that you can bring in as part of your team too, that's very powerful. So as an example, I just had a client this week. They have about $5 million with me. They've been an investment only client for about 4 years, and I created this chart that's sort of these bubbles around, we call it our advanced plan, and one was around estate planning. So I just started asking him about how he plans. His daughter just got married and had a child, and so I just wanted to raise that question. It's the only time all of a sudden that's a hot topic to him. It's really important that his assets flow to her and are protected and flow to the grandchild. So that all of a sudden, so finally through education and some open-ended questions and discovery of just knowing his situation a bit, finally kind of began to turn him into focus on some other planning over and above the investments.
But it took a long time to get there.
It took a while.
Yeah.
Yes.
Yeah. Okay. Very, very cool.
I'll just one more comment, Alex. I think that, you know, we always try, we're all proponents of SNAP, and we try to create a base financial analysis. I think when you have someone who has a lot of money and they don't spend a lot, they're really not worried about running out of money. They don't worry about that. It's not a main concern. They feel they have the ability to fund, and they'll leave a good legacy. That's what can be challenging. They don't feel that they need help, so the data gathering could be a little challenging. So that's when these types of conversations end up, you know, chipping away at that exterior that's kind of guarded, and then slowly you can kind of open them up to more planning.
Okay. Yep. That makes a lot of sense. Allison.
Alex, your last point took mine. But the concept, the only thing I can add, I totally agree with what they both said, is to me, people who maybe have, if we use the word resistance to planning, it's because I think planning has a loose definition and people may think they have a misconception of what that entails. And if they're people that maybe didn't come from a trusted referral or aren't familiar with yourself or your team, they may think you're trying to sell them something. They think it's going to hurt. And they, especially if they're a professional, they may have been let down by professionals in the past and they see you as another person that's going to waste their time. So I always try and get a temperature check on what that attitude is. And I find positioning it in like a baby step approach where you start with only data gathering. Because many times the data gathering, if you kind of seed what the plan is going to look like and the purpose, but if you can get the data, I think, and be able to put it into a plan to even show some initial projections and answer a few questions, it builds confidence and trust in what that process looks like. And so I've learned to, instead of trying to make it perfect and have every detail that you want to be able to cover the various modules that you want to cover, just start with asking questions and gather what you can, model what you can. And I've never had someone see a first model not want to see a second model. And many times if you wait to get the last information and make it perfect, you'll never get there. So even when it comes down to spending, I have lots of new clients who they don't know what they spend. They don't know what they want. So I use kind of models or examples to show what would it look like in this example or this example. And I think the other thing to similar to what Alex said is you don't ignore your existing clients who you've tried to do planning for that maybe have kind of closed the door on it, because if it's part of your regular meeting process and you're always going back to gather data, I've had a number of examples as well where clients didn't want to do planning or you couldn't gather the data or you outlined some recommendations from it, but it didn't align for whatever reason. But as things change in their lives, and I think even the last couple of years we've all gone through, things have changed. So always having those rediscovering data gathering meetings, even with your existing clients, not only is that continuing to add value for them, but it's also giving you the information that you need to help guide them to meet their objectives that left to their own accord, I'm good, I don't need planning. But once you start asking those questions, it starts triggering that uncertainty. And I'm a big believer that our role is to combat uncertainty and provide clarity for our clients. And it's very hard to do that when you don't have data and you don't have that data outlined in such a way that they can digest as well.
And that's an excellent point about the life events will trigger the need for financial planning, but you can't get that information without the trust being built to ask those questions and have those conversations. Excellent. Okay. And Per, anything to add to that?
I mean, come on. I think everybody made excellent points. Alex's point, and I think this is one of the key points, is that you get an investment client in, they invest $1 million with you, you give them the portfolio, you don't do a financial plan. It sounds like it was easy, but it's 100% that's borrowed money. And as long as you're okay with that, just accept that they may leave at any time. And you did get paid during the time that you had the money. Don't get upset if they do leave, because you really didn't do a lot. other than pick a portfolio for them, which is important, but it's not the full picture and it's not the full scope of, if you're holding yourself out as a financial planner, that's not the full scope of what you're supposed to be offering. For those clients that are reticent to financial planning, the new ones I find are mostly coming to me for financial planning, so I don't run into this a lot. But what I do start with in that case, or maybe it's someone that I've inherited from another advisor, I at least start with net worth tracking. So I'll show them a graph of where the net worth was last year and where it is this year. And then we just keep updating that. And eventually we introduce financial planning concepts, and eventually that usually leads to them wanting a financial plan. A lot of clients, some clients will come on board these days and say, I want a financial plan, but I want to do it in a year when XYZ life event happens, and then I want to see what the financial plan looks like. So that's fine too. And the number one thing, advice that I'll give that wasn't talked about is fees. And in terms of your fee, my fee is higher than what another advisor might be, because I do financial planning. And so not only are you getting my 27 years of time in the markets and in the financial industry, you're so in terms of investment advice, you're also getting my financial planning advice and all of that. And so when somebody declines to do a financial plan, I don't discount. I say, look, these are the services we offer. We offer the financial planning. If you choose not to take it at this time, that's entirely your call. You're a grown adult. And but these are the fees I charge. And just so you know, anytime you're ready, we're ready to do the financial plan because you're already paying for it. So that's what we do. But honestly, like a lot of the new clients coming along these days, don't reject a financial plan. They all seem is obvious. I do think Allison has a really good point that they may be reticent because they feel like they're going to be sold to, and you're just going to pitch them a whole bunch of stuff and try and sell them a whole life policy, right? So you need to dispel, just like when you're doing your initial prospect meeting, you share your fees up front, so you're super transparent about that. You can also be transparent with the fact that I'm really not trying to sell you something. I'm just trying to make sure that I understand your situation and you're comfortable. And I tell them the stories of clients where I've told them to cancel some life insurance because they were overinsured because another advisor had sold them too much life insurance, for example. So that's what little I can add, because the other three were great.
No, and that's excellent. And do you find that there's been a shift in new clients that coming to you? You say now most of them are looking for a financial plan. Is that because there's been a shift in what consumers want, or is it because of how you, market and brand yourself? Like, what would you attribute that to?
Sheer luck. No, I don't know. It could be. I think it's a number of things. I think first of all, the ability to get in and get okay investment advice is very easy from robo-advisors or banks. You're not going to get great investment advice, but you're going to get maybe good enough, right? So the people that are looking for investment advice are not really delving into much of anything. The people that are looking for advice in financial planning, they're coming at you either because they know they have a problem, or the marketing that I've done has told them that they have a problem, and so then their pain point has been identified, and I'm the solution. I also think that two major things have happened in the past. We're going on 3 years now. The first one is there was a little thing called a pandemic, and when the pandemic happened, everybody became distinctly aware of their own mortality, and they took an introspective look at themselves. And I saw a lot of those people coming and say, look, we better get our stuff in order. So because, what if the worst happened? When the alpha and beta variants were out there and they were, taking out people of all ages, and so people wanted to have their life in order so that they could feel comfortable. Then the second thing that's happened in the past 6 months, I think, is with rising interest rates. A lot of people who are younger than me have not lived in a rising interest rate environment. And so this is new to them, and they don't know how to behave and how to act. They're used to money being free. So that also gives them pause to do an introspection and say, listen, I need to get some advice here, what to do. So people are coming, they're looking either for advice or they're looking for a financial plan. Usually when you're looking for advice, you end up getting a financial plan because it's the easiest way to get the advice.
Okay, yep, that makes sense. And I know that you're a content creator yourself. What types of content are you finding that your audience wants, like particularly within the past year? Like what type of content do you find is resonating with your clients and your prospects?
Let's see, it's varied. During the pandemic and slightly before the pandemic, anytime you talked about estate planning, being an executor, how wills work, that was very highly subscribed. That petered off. Then for a period, we had anything that related to business owners and how they should act during COVID. So we brought on like an HR specialist who's talked about how to hire and fire people in a pandemic, or the things you need to think about with pandemic with employees. That was very popular. In the first half of this year, as the markets were throwing up all over themselves, doing webinars with market experts from, say, fund companies or economists talking about the potential for a recession or investor behavior type things have been very popular. And lately it's coming back around to just general financial planning topics. So that's where we're at. And probably in the new year, usually around tax season, when we do our typical Ask Me Anything webinar on taxes, that's usually very well subscribed and people jump in, and we have a good half an hour to an hour with ourselves and a CPA, and they get to ask anything, and the questions are quite good, actually.
Okay, excellent. Thank you. Okay, so next question, and we will jump back to Eric for this one. How is the financial planning process related to the growth of your practice? So if you had to sort of explain the correlation between financial planning and building a successful advisory practice over the long term, how significant is the planning part, and what role does it play in the growth of your practice?
I think that everyone on this panel and probably everyone on this call is looking for larger clients. Everybody wants to manage fewer relationships, have more assets under management in their direction, and more capacity in what they do on a day-to-day basis, so that those that they serve are getting the greatest amount of value from them. And I'll just use one example that we had last year. The planning process is why we ended up getting the relationship. So it was a competitive situation. There were 4 different advisory practices called in by the CPA to meet with the client who was selling her business. And we were the only practice that went in and had, after having a discovery meeting, the second meeting, we went in and we had various scenarios created to address the objectives, the concerns, the questions, and everything else that she had. And so right away, credibility was established, and the opportunity to pursue and have further conversations, eventually, winning the bid, so to speak, to manage the assets, was established because of the planning. And so that has only led to further planning since she's become a client, because various issues arose out of that process that she wanted greater clarification on and things of that nature. So you cannot go into a competitive situation without having answers for clients, right? And if they've got questions, you have to be able to quantify or validate your responses. And there's no better way of doing that than numbers or illustrations and things of that nature to help substantiate your thesis or what you're saying with the client.
Yeah, and that makes a lot of sense. And I guess you can probably look at it from 2 ways, the financial planning process with prospects, and then also the financial planning process with existing clients. And so you just touched on essentially that, I guess that would be a prospect, how you want prospective business using the financial planning process. How would you correlate it to the growth of current clients?
I think just, again, greater clarification, and once that planning is established and the clients have greater peace of mind, you've just shored up the relationship and the trust factor that much more, which is going to lead to referability. And so I think that's ultimately where your growth is coming from, is the introduction of new clients or family members, so that the succession of those assets stays within your practice and things of that nature. So I'd say that's where the greatest success is going to come from, existing clients in our practices.
Excellent. Alex?
Yeah, I like everything that Eric said, as always. I like everyone on this panel. So, but yeah, I think I'd touch on add a couple things. One would be that I find it very, I always try and engage both spouses. We've all read those studies that about 70 to 80% of people who, once they're widowed, they change advisors, right? So I think most spouses are fairly engaged, I find, in the financial planning process, more so than the investment, which tends to be one disengaged spouse and one engaged spouse. So I actually also had, at the beginning of this year, I had a business owner that had brought many, he's an engineer, brought many different products to patent and to market. And so very, very technical, and actually did a technical analysis that he shared with me around 6 different firms, right? So he basically tried to figure out on a fee basis, on a rate of return basis over 5, 10, 15 years, based on similar asset allocations, onboarding process, et cetera, who was the best fit. And what was interesting is that not one person stood out from the other on the technical factors of fees, performance, et cetera. So then it really came down to what are your internal and external scope of services that you offer. So do you have the ability to do planning? Do you have, and all those, the various stages of planning, which I kind of bucket into 4 groups. And do you have the ability to do that in-house? But more importantly, do you have someone external that you've partnered with in a collaborative manner to implement that as well? And so that's very key to me. And I think most of us would agree that whether it's, Snap, that type of aggregation and the analysis on the numbers side, that is the pillar of tax planning, that we need that data to further answer all sorts of business planning questions and estate planning questions. We need that first base level of understanding of the numbers to then do further planning. So.
Yep, that makes sense. And all advisors have, their own unique process that they follow. But what would you, how do you bucket the 4 stages for your own process of financial planning?
So this wealth management formula that I write out with clients has the investment consulting. So making smart decisions with your money is kind of is the most important factor, but then there's the advanced planning, which is 4 other factors. And in order of importance, it's mitigating tax, followed by taking care of your heirs and business succession, so wealth transfer, wealth protection, so making sure nothing derails your plan, and that could be property casualty, it could be life, it could be, it's usually offsetting with some form of insurance typically. And then last but not least, charitable giving to the extent that you want to magnify those gifts.
Excellent, thank you. All right, Allison.
Great. I think the same, it echoed what they had said, but I'm sure none of us here have had a client refer you or get a referral from a client and say, this is par, I'll make it up, this is par, he's going to get you 0.25% more than this person across the street. That's not why people refer business. They refer it, good referrals come from people that have experienced the outcome of your planning. And so that's critical to building that pipeline of clients and also providing existing services to your clients. Two kind of unique areas, not unique, but that I can add on from the other 2 is one, as an advisor who's come into an established practice, planning was integral to both my growth and learning in the business, but also to my relationship and building that trust factor with our clients, as well as strengthening our practice as far as succession planning goes, that we have documented plans, documented analysis, that I was able to add value for the clients from right away. And so for any advisors on this call who maybe are looking to build capacity within their practice, whether that's for retirement purposes or growth of the business, is I would suggest thinking about, can you assign your, whether it's an associate advisor or a partner that's coming in, to be the internal expert on planning, and whether that's outsourcing it to, in our case, our wealth planning team, but kind of taking leadership on that module of your business, I think can add a lot of value and capacity and scope. The other area that I've seen quite a bit of success from in this past 18 months that I probably wouldn't have anticipated is I've done a lot of planning with regard to estate transfers, with power of attorneys and with the family at the table. So if you have a client who is maybe getting on later in life, you may think the plan's in place from an estate planning standpoint, but we have found that there's lots of questions, and that's when we look at those milestones of how can you keep planning based on current data, is being able to our number one saying is we plan for the life of the money, not the person whose name the account is in. And being able to do those plans with the power of attorneys and with the family to show, here's some things that we can do to help optimize the estate at the end of the day, has been really helpful, and something that without planning and the data and the foresight to do that, you'd be left in a reactive instead of proactive spot.
Excellent. Per?
Well, after having listened to my three excellent colleagues talk about this topic, I'm going to reiterate the question in the first place, which is, why would you do financial planning in the first place? So first of all, you want to get up your, so if we want to have, let's say Alex is talking about having 220 clients, and to avoid overload, because he's only one human being, and when we tried to clone him, it worked out really poorly. So, so if Alex is trying to grow his practice and doesn't want to be overwhelmed with the number of people, the first place he needs to look at is internally and see, how can I get more assets out of the existing clients? How can I squeeze more water from this stone? And the number one thing you want to try and do is hold 100% of your client's assets, which is all you can ask of a client, right? And so if you can do that, then instantly you have the same number of clients, but you've grown your book. And so financial planning will give you that. The next thing is, and the other point I'll make, because everything else everybody says is great, I can repeat it, but that just makes me look smart, is that there's 330, for every advisor in Canada, there's 330 people. So Canada is extremely over-advised, as opposed, or people that claim that they're advisors. And whereas in the US, it's something like 1,100 or 1,500 people per advisor. So in Canada, it's a terrible environment actually to be a financial advisor, because the competition is so high. Now, fortunately, we have 330 clients, coincidentally, or 330 households coincidentally. So I guess we're on average, and Alex got some catching up to do. But the thing is, how do you? So if we're that over advised and we have that many people pushing, and then you've got these Quest Trades and robo advisors coming out there claiming that they do useful things, which they don't. They do have lower fees than me, but they also, I can charge you a 0% fee and give you 0% return as well. I'm really good at that. Or I can lose 25% of your money for 0 fee, not a problem. So how do you differentiate yourself against all those other advisors, right? And everybody has to come at it from a different perspective. Ourselves, the four people on this call, clearly have decided that being a financial planner is how we're going to differentiate ourselves. We're not just going to differentiate ourselves by offering a great investment experience. We're going to start with the financial plan, and then we have a toolbox of things that we use to implement that financial plan. Investments is one of them, insurance is another, tax planning is a third, estate planning is a fourth, and none of them are more important than the other. They're all equally important, although I would argue probably that tax planning is the most important thing and the number one way to push your net worth forward. So, so in the end, if you want to stay competitive in this business and you want to beat out, AI and you want to beat out the robo advisors, the only way you're going to do it is through personalized financial planning, and that's basically it. When AI can write a moderately good essay on the Second World War now, we've seen the Chat GPR, whatever it's called. You have to differentiate, and you have to bring human advice.
Yeah, and that makes a lot of sense. That makes a lot of sense. Okay, that's excellent. And then I guess a follow-up to that question for you would be, do you do anything to really gauge and get feedback from your clients based on what their experiences? So we know that financial planning is bringing a huge amount of value to your practice, but are you basing the success from your clients' perspective on, retention? Do you do surveys? Do you ask them? How do you gauge how they feel about what you're doing for them?
I'll talk about what we do internally, and I'll talk about one thing that we do at Asante, which is amazing. So internally, we track clients' net worth over time. And so we track, so let's say I did your financial plan, Alex, back in 2013, and then now it's almost 2023, 2022, and I'll have a chart showing you what your net worth was every year, let's go this way, and then showing you that it's growing and versus what the projection was, and ideally where it actually is beating what the projection was. And so that's one thing we do internally in this practice. I know a bunch of other practices do it too, so we're not some kind of rocket science that's invented, cold fusion. But and the other thing that Asante does, which is really great, is Asante's hired a firm that goes out and asks your clients, surveys your clients. And when we first did it, it was an extremely we did it once ourselves through SurveyMonkey. That went pretty good, and then we did it now through this firm that Asante uses, and it was actually, kind of felt scary, and you felt vulnerable. And you said, what if everybody says that Pear is a complete waste of time, and I should leave? And out of that, you get a whole bunch of honest answers, that are, of course, anonymous. So you can't figure out who that one person said that they're looking for a new advisor is. But everybody else, you get a lot of positive stuff. And you also get, your net promoter score. You can also ask questions like, what kind of content would you like to see next year? What would be more interesting for you, right? So, would you like to see more of this or that? And so it really helps you tailor towards your existing client base, which I think it's phenomenal. So surveying, yes, 100%. We're trying to do it every 2 years, so we don't want to, spam people every year with a survey, but every 2 years, pardon me, is a good choice. And it was scary at first, but if someone's thinking of leaving, they're going to leave anyway. So why do you want them with you in the first place? And you got paid for the time that they were here. So, but not that we have a lot of people leave, but I'm just saying, don't be scared of it.
No, that makes sense. There's a huge sense of vulnerability when it comes to asking people for feedback. So that's naturally a scary thing. We're not really
like
wired
imagine if I went to my wife and said, hey, how am I as a husband? Tell me honestly, truthfully, and anonymously. I don't think I'd like that very much. I'm not going to do it. But, that's a scary and vulnerable thing to do, right? And so, but yeah, a key point is people respond to vulnerability. So when you are vulnerable, you talk about mistakes you've made in your life, things that you've seen. People actually respond really positively to that, and it builds trust. And obviously, you're sharing, so that's key.
I've seen that in a few studies, that when you start with the vulnerability, people will reciprocate that as you build the relationship. And that's probably exactly what you're referring to there.
That's right. Yeah. And it allows then people who are reticent to open up tend to open up more. If you've ever done therapy, watch your therapist do it. It works really, really well.
Exactly. Okay, perfect. Awesome. So that's a great topic. Thank you, everybody. I'm going to move on to the next question, and we'll start with Eric. And this is a big question, and it might be kind of hard to answer, and we've touched on it a little bit more, but are you able to tell me how you established your financial planning process and how it has evolved over the years? And if there's been any key, resources, people, experiences that have helped you, iterate and improve your process along your journey? And I know that's a huge question and probably hard to answer, but I'd just like to hear what everybody has to say on that one.
Yeah, I think everyone's process evolves over time. You can't help but evolve it as you become more informed and educated, and you get a little wisdom over the years, hopefully, anyway. So I think absolutely, we once upon a time, the financial plan was kind of a one-page thing, or the back of a napkin, or whatnot, right, to kind of get your point across. And I think just the way that technology has evolved, the software that's available, and obviously we use Snap, we love Snap, we think it's a great tool for us to get our points across and deliver that value to clients. And we've seen different versions of software over the years that we've used, and fortunately it keeps getting better and better and better. And so I think that inevitably, if you adopt this process and you use your knowledge over time and the experiences that you gain with the relationships that you have, and some of them that you'll lose, I mean, you'll learn through that process as well, right? So that you can't help but, again, just establish that rapport, that trust, that, those, without trust, there's nothing in this business, right? And the only way to get that across is obviously vulnerability, compassion, understanding, empathy, all those things that we need to possess as advisors and planners. But then ultimately just having a deliverable and something that you can absolutely follow up on, because what you say matters. What you tell someone you're going to do, you better be able to deliver, right? And so if you don't have those processes, the reminders, and without software, we don't have reminders. We can't remember everything, right? So we need those CRMs and things of that nature to help us deliver exceptional service. So yeah, definitely it's been an evolution, and I'll let some of the others throw something at that.
Excellent, thank you. Alex?
So it's evolved for me through with Trimark InSync. If I don't know how many advisors would remember that one, but that was sort of a nice, simple visual. And I think, you know, I think about the client experience a lot, and I think about how can I simplify things for them? So assuming that we're building that trust, we've built that trust, you know, a lot of them just want some quick and dirty answers, or, you know, am I going to be okay? Do I have enough? Could we run this scenario? So it evolved for me from InSync, which I thought was a great deliverable, to then Naviplan, and that was Naviplan was used and continues to be used by our head office that does a lot of internal wealth planning. So those tend to be, so I didn't love the outputs of Naviplan when I started to use it, the online version. And subsequently, I was introduced to Snap by Mr. Eric Thompson here. And so I think a lot of it, we're storytellers as well, right? We're trying to have a grouping of stories to either motivate, convince, you know, get people, cure their uncertainty, as Allison was saying. So those deliverables are very important to me. What the output looks like that you can share, and the ease of which you and your team can deliver that. So we use Snap, and we use it in different stages. So depending on the segment and tier of the client, one of my junior associates would actually do the Snap presentation and all the planning behind that, and present it to build that relationship for succession. And I'll take the more complex versions. But I do really, really like the output. And I think speaking to your peers and figuring out how to best and efficiently communicate what that deliverable is to your different personality type is very, very important as well.
Excellent, thank you. Allison?
Yeah, I can totally echo that same concept that it's evolving over time. And I always say I look back 5 years ago on the kind of the initial plans I did, and I hope in 5 years from now, we'll even look at them and kind of laugh in the nicest way as we continue to evolve and get better, and technology makes things more efficient. But I think the key for me has been just coming to the realization and understanding that there is no one template and one system that's going to work for every single client. And I think the magic is in understanding what that client wants to know and the best way to present it to them. Except for my small handful of engineer clients, most people don't care about every single input that went into the plan, how it got there, and where that came from. Most people want an executive summary of the outcome and maybe some of the analysis and different scenarios that have been run to build the trust that as a result of the plan, the recommendations will be X. And I think it's based on, it's that output and putting them as part of the process. And I also think that I, for a long time, wanted my plans to be perfect before I presented them. And I've realized, and Snap has actually helped with that it doesn't have to be this shiny thing with a bow on it that's presented to the client and walked away from. Some of the tools that Snap has to be able to show things on the fly and run things quickly, to some people is actually more valuable than taking back a plan, doing more detailed edits to it, and presenting it to them separately. So I think I've evolved over time to know how do you cater it to that client, and I just want to keep doing better plans with more quality outputs in the least amount of time, and not dissimilar to Alex. I have two associates that do all of our client service, and I've been trying to involve them in the planning process as well, because it helps show the clients see strength of team. Even though at the end of the day I'm the one presenting the plan, it really solidifies that team effort, that when there are questions that come up and everything is tied to planning, that it wasn't just one person that did it, we all did it on their behalf, and that we'll continue to evolve it as it goes forward.
Excellent, thank you. And Per, what can you tell us about your process and how it's evolved?
Well, when I started working with individuals about 9 years ago, coming over from from institutional. The financial planning software we used was a spreadsheet, and it was a very complex spreadsheet. And one of the nightmares of it was every year updating all the tax data and so on and so forth. And I've been very pleased to outsource that to another company. It's named Snap Projections. Worked out really well. The way it's changed is I've been looking at ways similar to everybody else, I think, to simplify. No, sorry. Delegate the grunt work of creating the financial plan and focus more on the on the concepts that we're going to try and implement and the solutions we're going to try and bring to the client, and then presenting it in an attractive manner. So with Snap Projections, there's a lot of flexibility in there, and one of the things I really valued with Snap Projections is the ability to call Lee up, for example, and say, hey, do you have this feature? No, we don't have it, but would you like it? Yes, I would. And then 3 to 6 months later, suddenly that feature is there. So that kind of flexibility is pretty amazing. And that has allowed me to create some pretty interesting and complex plans. So Naviplan, for example, you can do a lot of complex things, but it's really hard to figure out how to get it all in there. And sometimes you have to jury rig it, whereas I find this a lot more straightforward. It also creates some beautiful visuals, which for most people who are visual, that then we put that into a presentation, that's pretty much all they get. We do have a couple clients like you, Allison, that will ask for all the data behind it. Those are usually our engineers and Russian physicists, which are even worse than engineers. Interestingly, I recently had a prospect who came to me, and I think he's going to go do it himself, because what he ended up doing is he interviewed 3 different financial planners, and then he went and researched each of the financial planning softwares that they were each using. And so then he had a whole bunch of detailed questions about Naviplan and Snap Projections and whatever else is out there, and asked me a bunch of questions, and his price was higher than that I quoted him for fees was higher than the usual price, because I figured this is going to be a lot of work going forward. And so ideally I've priced myself out of that prospect, because what you don't want is, I don't mind having someone that's going along with me on the journey and involved and interested in the data and how it comes out. That's totally fine. But I don't want someone that actually, is now retired and is a bored computer software engineer and wants to figure out how to do it himself. Then he can call up Snap Projections and get his own subscription. So, because that's not it for me. So yeah, the evolution, I think there's ideally working with complex clients and keeping the complexity in the plan is there, but the hardest part of our job is to take complex concepts and explain them in understandable manners to people that don't do what we do for a living. And so something that I keep fighting with my team about is jargon. Don't use words like rebalancing, don't use words like letter of direction and things like that with clients, because it means nothing to them. You might as well say rim flim flam. They don't know. So the education part is so key. And so that's really my biggest challenge going forward, is making things more and more understandable to the layperson, the business person that doesn't have time to figure it all out. Right. So
Yeah, that's excellent. That makes a lot of sense. Okay, so there's more questions I wanted to ask you guys, but clearly we're over time here. So I'm just going to ask one more quick question from each of you, and then I won't take up any more of your valuable time. So what are some of the things that you're going to be working on over the next 6 to 12 months? What are you going to be focused on with respect to financial planning? What are you watching out for? What's next for you over the next 6 to 12 months, Eric?
I think as I've met with my partners and team members over the last several weeks as we do our business planning into 2023, it's really about just fine tuning all our processes and creating more of a turnkey operation. The deliverables have to be spelt out very succinctly, and our process has to be such that we follow it, without any deviation. Again, if we're going to create capacity in our practice, then we have to follow a very disciplined process. So I think 2023, if there was a theme that we had to pick, it's going to be more about, just internal disciplines and making sure we're following up and delivering in timely fashion for our clients. And hopefully at the end of the day, that creates more capacity for us to, create more relationships, more meaningful relationships with our clients.
Excellent. That sounds good. Alex?
I've been creating an Excel list, which is a calendar, and essentially what I'm trying to do is, being the sole person that's client facing for the most part, I'm trying to create every month proactive ways for my team members to get in front of people. So one of them will be Snap and updating the data on Snap projections for clients, and for whether either a follow-up email needs to go out or a presentation that they could generate and they can do and present. But each month by month, whether it's TFSA top-ups and whether it's white glove service on delivering tax receipts, whether Per just gave me an idea about doing a little webinar with a CPA, right? So there's so many different touch points. I've already come up with probably about 50 that you could easily do, but that's what I'm working on, is just getting my team involved more and more so that clients are feeling very well serviced. It's very proactive, and it's not just relying on the 3 times a year that they're meeting with me.
Okay, yep, that sounds good. And I should mention too, you published your first book in October called Exit Strategy, that is available on Amazon. What led to you wanting to publish that book?
Actually, it comes back to what Per was saying. So I work primarily with complex business owners, and I wanted to establish myself as a bit of a thought leader in the advisory industry on exit strategy planning and just what to do on that post sale as well, but leading up to it. And so yeah, it came out on October 18th, and it's been already it's led to a lot of conversations, a lot of prospective meetings, and a couple podcasts, which are fun. So it's been a fun journey so far, but it's certainly well worth the effort.
Awesome. Well, congratulations. That's a big feat.
Thank you.
And Allison, what's next for you for 2023?
Yeah, so many things, as if we all were in that time of year where to focus on. And I think to me, under the planning heading is just what we've talked about making planning part of the system and the service delivery that you give to your clients. And I think we are all really close to there and do that all the time. But if I want to make sure at every annual general meeting, every touch point I'm having with clients, we're going back to the plan and asking some of those people that maybe weren't as engaged previously, or you think, oh, they're good, we've already set them up. Ask those questions, have those rediscovery meetings to try to continue to build deeper and deeper relations with your existing clients. I'm also focused on, I think I do a very good job of presenting plans to clients, and clients see the value in them, and that leads to referrals. Where I could be better is using some of those case studies that I use with clients with my COIs, so with accountants and lawyers that I work with, to kind of show them this is the value that is being delivered to your clients, and what other clients could that be for. And I do it a little bit, and I want to do it more to actually engage the clients, accountants or lawyers or other people in their kind of sphere of influence into the planning process more, so that to really solidify, I see myself as the quarterback of their affairs, and to use the plan as part of that. And that's organically happens, but kind of like what Eric said, it's all about the systems, all about the process. We're all so busy, we have so much going on. We want to use technology to help ensure our processes are delivering the most amount of value, because at the end of the day, that's why we're here.
Excellent. I love that. And lastly, from you, Per, what's next for 2023?
Well, I made a list here and I broke them down into 2 topics. One is kind of tax planning notes that we'll be adding to financial plans as we go forward. So not you, Eric, but my Eric, who is the millennial on our team, deals with a lot of people that are in a situation where they're doing quite well and they're ready to buy their first home. So taking advantage of the first home, I'm not even going to call the account right, but the first home buyer savings account, you know what I mean, the new account, and the ability to use both that and the home buyer plan, and doing planning around that for them, I think will be key. I haven't seen a lot of other tax changes. Usually this time of year, I'm thinking about any kind of tax changes that we need to build into our plans going forward. And one thing that we do need to do is really be cautious next year But the assumption that money is free, it no longer is. Prime rate is painful, and it's back to when I got my first mortgage. So that is life, but we do need to pay attention to that in our models and in our default settings in our planning software as well. So we got to be careful for that as well. In terms of practice-wise, I kind of echo what Eric said, which is that continuing to work on building a self-running business. Continuing to build systems and processes that are measurable and trackable, and ensure that we are doing the right things compliance-wise in terms of our group, so tracking that so we can actually see that when somebody from compliance says, well, this, and push back and say, no, we've actually improved in this way. And then tracking that we are, in fact, delivering what we say we're going to deliver to our clients, and so tracking service delivery to the clients and making sure that we are on top of that, and if we're not, then catching up where we need to catch up.
Awesome. It's going to be a busy year.
Yes.
Okay, well, thank you so much to all four of you. This has been a highly, highly valuable and interesting session for everybody here today. I'll be following up with everyone via email. If you have any questions, you'll get an email from me today, and I'll leave it at that. I hope everybody has a wonderful day. And again, thank you so much for my wonderful 4 panelists. And I hope everybody has a great day. Bye for now. Thanks, guys.
Alex.
Bye.
Thanks so much.
Thanks,
Bye.
Alex. Thanks, everybody.
Thanks.
Bye.
Take care.